Hi, and welcome to a FaciliTopics presentation. My name is DRose, and over the next 10 minutes, I'm going to share with you some ideas about financial management and the importance of it in the field of facility management. First, a little bit about me. I've been involved in facilities for over 20 years. I was recognized as IFMA's Distinguished Member last year, 2020, and have helped my local chapter win several awards, including IFMA's Chapter of the Year. I'm a member of several facility management communities and have achieved credentials from 3 different governing organizations. The other side of my story is that I have attended 5 different colleges, changed majors 3 times, then started living life and raising a family. Out of the 5 schools, I obtained an associate's degree. I've worked in the public sector for a nonprofit, banking, construction, and restaurant facilities, also own my own company. I share this side of my life because as you go through your career, you may make changes, find yourself underemployed, or just dealing with the various challenges of life. I've walked through it and want to let you know opportunity is just around the corner. I like to say that I made a right turn into facility management. And I hope I'm able to make it easy and not so scary when it comes to handling and discussing finances. As we begin this program, I want to note that perspectives of this topic can vary quite considerably depending on the industry, organization, or application. A facility manager oversees one of the highest budgets in an organization, tending to the physical assets. I will cover the topics of the differences between operating expense versus capital, planning, tracking, and adjustments, and creating a business case. Realize that with great power comes great responsibility. So let's get into it. Let's do this financial review. So what is financial management? It is managing the money or assets of an organization, how they invest the resources in order to increase gains and limit losses, doing what is in the best interest of the shareholder, stockholder, owner, and member. Even nonprofit organizations want to use the financial gains to reinvest those resources back into the organization and the clients and members it serves. A facility manager needs to be competent in understanding the differences between operations expenses and capital purchases, how to plan, track, and make adjustments. They also need to be able to create and communicate a business case. So to start defining the differences, what is a capital item and what is an expense item, based upon the Internal Revenue Service and generally accepted accounting principles, expenses are lower cost consumable items which last a shorter amount of time. They are tracked immediately and reduce profit. Capital are higher dollar items that will be used for a long duration and or improve the overall value of a primary asset. Capital purchases are assets which are depreciated over time, which I will cover later in this presentation. So an example on a personal level could be a house as a capital investment. Also new windows or a new roof. These would be costly components that add value to the primary asset, the house, and would be considered capital. The light bulbs, electricity, water would be considered expenses. Renovating the kitchen would be considered a capital investment. Large appliances could be included into that capital side. The plates, bowls, small appliances like a toaster or coffee maker would be considered expense. The couch and other large pieces of furniture could also be considered capital. The artwork could be considered capital if painted by a famous artist and had significant value to it. The accessories, clock, flower, vase, would be considered expenses. Another example, a car could be considered a capital purchase, especially if someone were, say, an Uber driver. The tires, rotors, and engine would be considered capital investments if they were completely replaced, whereas spark plugs, oil, and other fluid changes, and gas would be considered expense items. So would insurance, licenses, and registration. And taking the car as an example, if the car was purchased for $25,000, it's going to lose some value over the next year. In other words, it's going to depreciate, but it's not going to be worth a zero. It will be devalued completely over its lifespan in years. The cost to operate the car are the expenses, in this case, $5,000. Similarly, with the smartphone you own, the value drops each time a new version comes out. You can buy a generation or two old iPhone, and it will operate well, but if you buy iPhone 5, there's little or no value to it, and the value has been completely depreciated. Next, we'll cover planning, tracking, and making adjustments to an asset plan. This spreadsheet is an example of a way to track what asset needs to be replaced and when. I know what you're thinking. Whoa, this is way too much information on a slide. I can't absorb all that data. No worries. We don't need to do a download into your brain. This next slide will stop the forces that cause that overload. Highlighting a few of the lines, the document shows locations, the capital asset to be replaced, and the estimated costs. The bottom line shows the estimated costs by upcoming year, so that money can be set aside to accomplish the work identified for replacement. This is helpful to be able to tell accounting what they need to set aside over the next 5+ years. Remember, you can pause this video at any time to review the information more in depth. Now, in order to be able to gain approval of a proposed list, the business case needs to be made that shows the value and importance of what is being proposed for replacement. It is sometimes known as the break-even point. As a facility leader, you must be able to present solid reasoning for improvement, make it so that senior management would be making a mistake if they did not sign off on the proposal. Consider price, quality, and speed of completion. Also, cost of taking no action compared to taking action. Consider the long-term life of building or property. Is there a lease coming due? Is the organization looking at a new facility in the next couple of years? What are the consequences for letting the system run until it fails? Finally, what is the value payback? How long will it take to pay off or recover costs of that asset? We will use the replacement of all the interior lighting at a building as an example, performing a lighting retrofit project, going from fluorescent tubes to LEDs. First off, why conduct this work? It will improve the lighting quality in the building and office spaces. It will save on electricity costs. LEDs use less energy and last longer compared to fluorescents. LEDs can last 20+ years compared to fluorescents, which last about 5 to 7 years. An added benefit is lower labor costs for the maintenance technician, having to only get up on a ladder once for the LEDs compared to 4 or more times for the fluorescent fixtures over that 20-year life cycle. Possible financial incentives: there may be rebates or tax breaks, which are paybacks or discounts from an electrical company or the government. In this particular case, the work will be performed during evening and weekends, so it does not impact the people working in the office. The work can be accomplished on this year's budget, making room for other projects next year. Remember, you can pause this video to review the information on this slide. For this example, the costs of materials and labor are $100,000. With a rebate and annual energy savings, in 3 years, the project will be paid for and be at the break-even point. After that, for years to come, the company will continue to save $20,000 per year on utilities. At the end of the estimated life, over $400,000 could be saved. What type of ongoing savings is that? Well, it should be the type of benefit your customer or owner would agree to move forward with and approve this type of project. Wrapping up, we cover the differences between operating expense and capital, showed an effective spreadsheet to help with planning, tracking, and making adjustments, and provided a break-even business case. Thank you for listening to this FaciliTopic on financial management. FaciliTopics are short lessons focused on the facility management industry, intended to give you an overview of one topic. For more FaciliTopics or to learn more about Facilithon, visit www.fmpipeline.org. I'm DRose. Thanks for joining me.